Fresh data gave strength to the narrative of a soft landing, but I want to remind you guys that the only reason why we get a rate cut is because the Fed is seeing weakness ahead, not strength. That's why he's easing up on the brake that he'd applied to the economy. So let's keep that in mind. Now, does that mean that we should begin to get bearish and sell everything? Well, absolutely not. Why? Because the trend is higher. Today, we hit an all-time high on the S&P 500, but then we retreated from that price. Now, it's a technical game, and you know that we've got to keep our eyes on the chart. And we didn't close the day above the first all-time high that we've now been battling against. This is our second time pushing up against it. But I'm going to remind you guys of my view of when we come back and hit an important trend line. I always view it like the SWAT team breaking down the door. They may not get it down the first time. They may not get it down the second time. But that third time, that door might come off its hinges. Well, tomorrow is the day. And tomorrow, if we hit it a third time, we could blast right through it. And I'm going to show you where I think the S&P 500 could go if this market wants to get bullish on the soft landing narrative that the Fed is offering up. And I do think that they will until we get other data that causes a sense of concern or panic. And then everybody's going to shift from one day to the next and say that everything's too expensive. But we've got to keep our eye on the AI story, as well as all of the incredible development that we've got. I'm going to be talking a little bit about Microsoft today. They announced a huge buyback, and you've got companies that are not acting like we're in a recession because we don't see the high level of layoffs. We don't see bad earnings. What we do see is that they're rich with cash still. And so that could cause people to be worried that inflation is not fully tackled, because when we got retail sales this morning, it was way stronger than anybody expected. It was up 1% when they were expecting it to be down 2%. And what it means is that even though people are cash strapped, credit cards potentially maxing out, they're still spending. They're not afraid yet. So when the consumer's not afraid, then corporations are not going to be afraid, and you're going to continue to see efforts to grow. That's where we're at, and it could be the soft landing narrative. We can't underestimate it. Only 3 times in history that I can remember did we ever get a soft landing, and so it's rare. It's the unicorn. We don't know if it's going to happen this time, but perhaps AI could contribute to a soft landing. And here's the bottom line on my intro, guys, is Wall Street will give the Fed the benefit of the doubt that he has nailed it until data proves otherwise. And the data that we got today on retail sales did the opposite. The data confirmed that the Fed could still be conservative with a 25 basis point cut, not a 50. And so we still have to see how the market's going to react to the news that we get tomorrow with the Fed, the rate cut, as well as him talking at 2:30 Eastern time. Market's going to react to that. And I guarantee you there's going to be volatility. So no matter what position you might be considering taking, expect a massive swing down, massive swing up. Then the market's going to tell us what it wants to do going into the end of this week and next week. That was the point of my last video, was let's give it not just till the end of this week, but let's see how next week plays out, because we also have triple witching, which is September 20th, which increases volatility to the downside in September. So I am in a call on the S&P 500. We picked it up off of the lows. It was part of the Stocks with Josh ChartGoat University 3K to 10K challenge. And I specifically spent time shopping for this play for all of you guys so that when I announced it, there would be time for people to enter. I didn't want to get into something in the morning time when it was super choppy, and then you get in and it runs up or runs down. I wanted to get into it at a moment in time when people could follow and get the same price I did. We pulled that off, and before the day was up, they were up 20%. And so it's looking good. But I want to remind everybody who's following me in this challenge, please, please, please consider that the main reason why I'm doing this challenge is to go through and provide some fresh trade alerts so that people can make money, but also so that you can understand how I employ the disciplines. Because you hear me talk about them all the time, but it's entirely another thing to put them into practice. And as we go through these trades, win or lose, we're going to look at how the trade disciplines that I talk about caused the win or the loss. We are trading the trend, we are using a stop loss, we're controlling position size, and we're not over trading. Guys, if you are not part of ChartGoat University, you're missing out on some great things that are happening over there, and it's constantly growing. So this week we've added Professor Salman, who's helping people in more of the investment strategy, people that are coming to this with more long-term goals. Professor Salman's class is open and he is instructing right now. It's a new channel in the Discord, and I have to shout out Spy Lord, who's actually live trading with the family on Tuesdays and Thursdays. And I believe this morning in the volatile markets, they picked up a 35% play on the SPY. Guys, there's something going on there every day. If you're in there, one, be patient, give yourself a little time to learn what's going on and carefully go through each channel and try to understand what you can learn from those channels. I'm dropping classes in the Discord weekly. I'm live trading Wednesday and Friday. And now we've added the small account challenge, and we've got some great crowned traders over there. So come trade with me, come learn to chart over there at the university and get a little help in your investment strategy. Okay, let's talk about one more thing. I'm coming to Chicagoland, but more specifically, I'm not going to be in Chicago. I'm going to be in Northwest Indiana, in Merrillville, Indiana. I'm doing an event with Stock Up with Larry Jones. This is an event that you got to get a ticket for. And Larry's event, it's not mine, but I am joining, and I'm excited because I'm coming prepared to talk about how to supercharge your charting journey. I'm also going to be covering some of the disciplines and how to employ them. But it's going to be a great time. I know that Larry's put a ton of effort and money into this. I think the tickets are simply meant to help cover the cost of the building. He's got a live band in there that's going to be performing of some world-class musicians, and I think it's simply going to be a great party, but it's also going to be a huge educational experience. And if you're trying to begin your journey, come check it out. There's going to be something there for you. Fed Fund Watch gave a 100% chance of a 25 basis point and still a 64% chance of a 50 basis point, which I really don't see happening. And the Fed talks at 2:30. 50 basis point means that the Fed is scared. 25 basis point means the Fed is in control. And I want to remind you guys why this matters to the market, because corporations need access to easy money or cheap money, and they don't have it right now because the rate has been higher for longer than it's been in a long time. And the simple bottom line is that when money is hard to borrow, growth comes slowly. You got to rely on your talent, not on just the strong influx of cash. Let's talk about some of the companies that were moving well today, and I'm going to take you into the first one, and it's Microsoft. Okay, so Microsoft, it's more of a risk assessment when looking at Microsoft today. Let's just do a quick recap of what they've accomplished with the share price over the last year and a half. So since 2023, these guys are up nearly 100% to date. Now, they were up over 100%, but they've pulled 6% down from their recent high. In 2024, they're up 20%. That's the contribution of 2024. The fact is, this thing has absolutely ripped, and it's about time that we look at what the chart is telling us. Is the chart setting up for the next leg up, or is the chart pointing to a potential leg down? Let's go check it out. All right, let's talk about some of the good news. Well, the good news is that the 50, the 100, and the 200-day moving average are all pointed up, and they have been flared apart, which signals a large move, which is something that the stock has enjoyed. But eventually, these moving averages begin to converge, and they begin to turn in towards each other, and they begin to get tangled up. And so the question is that what Microsoft is moving towards right now? We do see on the chart a bearish head and shoulders pattern, and this was the main thing that I wanted to draw to everyone's attention, is that the neckline on that is 401. Now, currently, we're sitting above it, and we've got a little bit of a red candle today, and this could continue to go higher from here. But the warning that I want to give everybody is watch these levels, because each one's going to be super critical moving forward. 427, 414, and then ultimately 401. If 401 is lost in the days ahead, then for a fact, we are going to have to come down to this 366 and then possibly even as low as 332. Now, I am not predicting Microsoft is doing that. I'm telling you that this is a bearish pattern. It shows slowing momentum. Matter of fact, let's go look at the momentum. The MACD measures momentum and acceleration, and what do we have? Well, it's showing us that even though the price is lofty and high, the bears are currently in charge of this momentum story on MACD, and when And if we were to see this climb higher, let's say it were to spike up with the rest of the market, you can see already that it would very clearly be a lower low in momentum. I wanted you guys to see that chart, not to freak you out, but to tell you that that chart is pointing to some bearishness. So yes, we could continue to climb, but the climbing story is sort of coming to an end. Guys, if you look at the charts, there's this idea of something rolling over, okay? Imagine you are rolling over and rolling out of bed. You're not in the safe spot that you thought you were. You're too close to the edge. You didn't realize it, and then you rolled over, you hit your face on the floor. That's why I showed you the Microsoft chart today. I'm not predicting that it's going straight down. Gave you guys those lines in the sand that you need to be watching, because if each of those gets crossed, then your level of concern or your hedging position needs to increase with each of those lines being broken. Right now, I'm having the attitude or the view of the soft landing, and I'm riding the market up. Right now, Microsoft is going up. But the question is institutional money selling into strength? Will we get a pop tomorrow, and will institutions begin to slowly unload their bags, and who's going to be doing the buying? Well, hopefully it's not the greedy retail market. Okay, what other chart do we have to look at today? Well, we got to look at Intel because they got some interesting news that we need to cover. The chart is possibly doing something bullish because it got totally beat down because of really a debt problem and the fact that they're behind the AI curve. But it's slowly moving up, and they've been getting some good news lately, and it could lead to a small pop. Let's go check out that chart. Okay, here's the things I want you guys to see inside this chart that are super important. One, we are above the 20 EMA, right? And there's actually a buy signal. You can buy when you open and close a candle above the 20 EMA, and that can often work as a good buying opportunity. But I want to caution you that I would like to see a second confirmation, and that's a break of this 22. So if price closes above 22 and we are above the 20 EMA, well, now we've got two confirmations of a bullish move. Where would the target be? Well, I could see us hitting this 25. And so this is a play that I'm very likely going to be checking out tomorrow. As soon as we get a couple hourly candles above the 22, I might jump into this for a play up to 25. What is that good news? Government contracts and more AI-fueled hype behind bringing them out of the depths and possibly back up. A lot of people love the company, and it could have a little pop. We need to be more concerned how it interacts with 25, because if it gets rejected there, then we know that the bearish story is going to continue from that point forward. But more opportunity going into this week than I see bearishness going into this week. So check out that chart, guys. Let me know what you think of Intel right now, as well as Microsoft. What is your position on either one of these? Okay, let's talk a little bit about oil and then crypto. And I'm going to keep this very simple. Oil, I caught an interesting interview from ConocoPhillips CEO on oil, and I know that it's been in a bearish trend. I talked the other day about the fact that we got extremely bearish data coming out of China. We're looking at a slowdown. The Fed's easing because of a potential slowdown here in the States, and that could cause oil to come down because the demand isn't there. We also have a lot of oil pumping. The U.S. is largely contributing to that. We're producing a ton of oil right now, and that's causing the price of oil to go down. But the CEO said something that I found very interesting, and I loved it, and you guys might even laugh at it. He talked about AI, okay? And it's like, everything AI. Yes, everything AI. He said that this country is going to need a lot of power. The bottom line is that we do not have all the power that we need to fuel the AI dream. And he reminded everybody that oil is going to probably be the most important element of pushing that narrative higher in 2025. We'll see. Is he right? What do you think? Let me know in the comments which is your favorite oil play. Okay, we got to leave some room for crypto. In particular, I have to talk about SUI. I did a video this last week where I said, guys, how about SUI? Take a look at the SUI chart. This one's going to rip, and it did rip. And it hit the target that I gave in that video, and I believe it's up nearly 38% since I did that video and told everybody this is something I'm buying heavily. Now, what's interesting is a lot of crypto did not rip in that same time frame, but SUI did. And that means it's an outlier when it moves ahead of everything else. Now, it hit a level of resistance that is a problem. We need to see it get above. I'm going to show that to you in the chart, but I also am going to remind you of something I said in that video, that if we got above that price of $1.18, that this would really become a rocket ship. And so I want to draw you back to your attention, and I'm going to re-give you guys my high price expectations. Let's go look at that chart real quick. Okay, I signaled SUI a buy right here on that day. I told you guys I was loading up. I said get it at 86, 87 cents, but get it. And since then, we've ripped straight up to 118. That's a 36% move. But here's the big story. Let's get some candles above 118, and that really opens the door for a much bigger SUI move. Over time, we're going to first have to tackle the middle of our channel. We'll see some resistance in this area, but eventually, if we climb back above it, it puts 300, even as high as 350 on the radar going into the end of this year. But let me be 100% clear. Only when you see some candles close above 118, right, do we get more bullish like that. And remember that one of the things I'm trying to share with people, both in the Chart Goat University and right here on my channel, is that even though I am excited about this potentially getting to $3 and $3.50 by the end of this year, I guarantee you I'm riding with a stop loss, because it's one of my 4 disciplines that has allowed me to be consistently profitable in my trading. I was getting in before it was 87 cents, and so I've got a ton of room. If you followed me, then you're in the same boat. And then we've got to give a shout out to BLUB. BLUB was the meme coin on the SUI ecosystem that I said could potentially become a pretty big deal in the days ahead. Well, we're up well over 100% over there. And again, let me know if you've made some money on BLUB. And I'm not selling my BLUB right now, and I'm not even pulling out my initial capital. I'm looking for any downturns to add a little bit more, because as long as SUI continues to pump, BLUB will follow. Guys, BLUB is higher risk than SUI. SUI's higher risk than Microsoft and the big tech plays. Keep that in mind. Only invest in crypto money that you're willing to lose, especially the meme coins. I appreciate you guys all joining me today. Peace and blessings. We'll see you in the Discord. Take care.